Okay, I assume that I'm visible and audible.
Yes.
Okay. You know, in chess tournaments, when beginners are trying to do little moves with their pawns, and people who are masters usually project their queen or one of their main players into the enemy lines because they know that usually going ahead and having a first mover advantage is usually the correct move to go. I think this is a very similar thing. I am not an expert in mutual funds, but I know quite a lot of chess. So, what is the interest of a mutual fund? Obviously, firstly, profit. Secondly, and this is crucially, having a first comer advantage and being an early investor in a company that I will later prove will become quite a relevant player in the global economy. Why is that efficient and good for you? Because you get credence in a board. Very likely you get a lot of voting stocks, which is quite important. You get a lot of voting rights through your stocks, which is quite relevant. 3, you have a bigger say, even if there's nothing like contractual there. It started growing. It means that the advisors or the workers trust you slightly more. Fourthly, you get know-how. You get exclusive access to special information that people that come after you or other investors would not have, which can always utilize in order to make sure that you have an advantage in this company. And fourthly, very importantly, you can direct the direction of the company long-term. If opening opposition says, oh, they're gonna make really difficult and very risky moves, you get to control those movements and, you know, push them towards the correct area when you're early on and when you have a lot of long-term stocks or whatever they're called, because it means that your faith is entirely dependent on the faith of the company, which means that it is correct for them to give you a big say in this because you incur a lot of risk. Lastly, on risk, I know what Top says, there is a lot of risk. This is fine. You're a mutual fund, right? You have good advisors. Risk taking is your fucking job. You clearly have other things under management as well, other companies you invest into. So there is a diversity, and the shock value is mitigated anyway. So why is it that this is a safe investment? A couple of reasons here. Firstly, a trend upwards. I know what Top will say. Oh, but markets fluctuate a lot. Some markets do, but there is a couple of nuances here. One, AI market will never explode across the board. Even if ChatGPT blows up, there is a lot of other industries, like sub-industries, to maintain the AI market going and thus to maintain this company relevant, such as medical stuff, telemedicine, medical diagnosis by AI. All of these are dependent on the chips that you will be providing. Secondly, education, remote learning, AI teachers, whatever, all of these will be dependent. Telemarketing, all of these will be dependent on you producing high quality and very high techie chips. All of this is to prove that it is unlikely that the bubble will ever burst. Secondly, even if there is fluctuation within your stocks, the fluctuation is like 5-10%, but the trajectory over 3 years, which is this motion, remains stable unless something incredibly terrible happens, like a skeleton in the closet of the CEO, which none of us can predict. And 3, this is a stable industry and not generally prone to fluctuation. This is the first 2 mechanisms. But what is the chip situation? And I'm gonna do a deep dive here. The main producers are currently Taiwan and the Netherlands. The Netherlands is quite an easy out. They do not have the producing capacity. They can at best source Europe, but not really. Taiwan, there is increasing risk of China invading or at least blocking Taiwan from giving chips to the West, which means that the US and the West need internal producing in scale and a bigger scale than currently Netherlands can ever produce. Secondly, it is China that is trying to ramp up, but there is a really good catch here. China has incredibly old technology, which they only got because they did espionage under the Trump first mandate, which means that their chips are currently 6 or 8 years old, which means that they cannot keep up. These are the chips that were basically used by DeepSeek. All of their window in order to make sure they never become as relevant as you are, even if they invest thousands of billions of dollars in their chip fund. So even if China will grow, which probably it will, you can outpace it as an American company. Thirdly, then, and very importantly, given that the West needs a provider and you are in the US, Trump will give subsidies like shit to you. Why is that? One, obviously because he wants to do a lot of protectionism, he wants to grow internal industries, and not only is he likely to give you subsidies to maintain afloat, but he will want to set up factories. He will want to give back the jobs to the Americans who can produce chips and manufacture chips in the US. Secondly, Trump is a lobby prince, which means that, thanks Sachin for this, Amazon and Meta lobby him like shit, but Amazon and Meta only have like software, they do not have hardware, which means that they will be directly dependent on this company to stay afloat, so they're very likely to lobby Trump to give you a lot of subsidies. Secondly, the trade war is likely to advantage you quite a lot as a company because the IP rights will be withdrawn from China, which means that you will have exclusive access to intellectual property of very high-tech technology, which so far had not been the case. Before I move on to the EU situation, I'm happy to take CO.
Yeah, subsidies help you if your product is like really expensive and you need money to produce more of your product. It doesn't help you if there's no demand for your product.
What have my last 3 minutes have been? I have proven to you that there is a growing global demand for this. I think it's really silly if you say AI is not growing. It is the main growing industry. I'm unsure what hill you're willing to die on. Lastly, European Union. The European Union has a booming AI market. There is the Lithuanian company, there is a Spanish company, I think, all of which are growing. They distrust China and they will not buy chips from China because of the Russia situation, because of the Xi uncertainty of his successor. All of this is to say the EU will also exclusively go to you to buy because you'll outpace all of the other people. Lastly, in terms of frame panel, this bubble, even if it bursts in the worst case scenario, will not burst during the Trump term because bubbles might blow up later, but as long as Trump gives it subsidies, it will not. And as I've proven, Trump will. There is a crucial window here because it is now developing. It is now that China does not have time to keep up. Those 3 years are exactly the window to boost the company, direct it in the correct direction. The way up is simple. I do not care about risks, and it is not greater than other risks you incur, and the return on investment is very likely to be high.
I'd like to thank the Prime Minister for that fine speech and to welcome the Leader of the Opposition to begin the case for opening opposition. Hear, hear.
Am I audible and visible?
Yes to both.
Cool. Is anyone not ready? Okay. I'll start with 2 pieces of framing. First on the goal of a mutual fund and second on the comparative, then 2 substantive arguments from OO. First on why AI demand is likely to go down, and second why NVIDIA specifically relying on TSMC is devastating for their business plan. First on framing, the goal of a mutual fund is long-term, sustainable, unrisky growth. Why is this? First, because mutual funds exist to have retail investors to get access to get basic access to stock markets. This means that they're required to reach a benchmark so they continue to have credibility and so they can continue to satisfy their current customers. This also means that the people investing in our mutual fund don't have a lot of collateral and don't have a lot of money built up, meaning that if they lose huge amounts of their investment, so they don't want you to lose. PM just asserts that you are totally fine with taking risks because you're a mutual fund. No, you're not a hedge fund. You're a mutual fund, which means you're more likely to be focused on long-term investment that are more likely to provide reliable support. This means that you're unlikely to be willing to accept risk, and your goal is to minimize risk. This means over-investing and over-indexing on a specific stock is unprofitable for you and a bad term. This means that you get but we think you probably just get access to the tech bubble either way because you can just invest in alternatives like Amazon, Microsoft, Google, and those services offer multiple revenue streams, meaning that even if the AI bubble collapses, you still have a lot of ways that you can receive revenue from Amazon, Microsoft, or Google, but NVIDIA only offers one. This is why the people who invested in NVIDIA in 2017 when the crypto bubble was blowing up got burned. This leads to my second piece of framing, which is the comparative, which is likely to be large tech companies, because obviously for all the reasons that PM tells you, you probably want to get ahead on the tech bubble, but you're likely to invest in more stable blue chip companies. You're going to concentrate on semiconductor markets like TSMC. You can invest in cloud apps that are reasonably unrisky. The first substantive argument then is AI demand is likely to go down. First on this is just like, look to the dot-com bubble. The AI market has three similarities to the dot-com bubble. First, it's focused on hype over fundamentals, i.e. specifically, it's focused on there's a single point of failure, which means that there's unlikely to be a lot of like support. So like, just as web traffic was equated with value, AI demos and chatbots are likely mistaken for sustainable revenue, when you see that there's not levels of sustainable revenue, because at any time they could go down. When kids stop using AI to cheat on their exams, it's going to go down. Second similarity is that there's a lot of excess capital that are chasing like unclear returns on investment. So like in the dot-com boom, companies were getting huge amounts of money to build websites with no monetization plan. Right now, corporations are spending billions of money on AI without proven business cases of how this can be useful, which takes out a lot of the mechanization out of PM about how it's going to be useful for like healthcare and stuff, because they're not actually using it for that stuff. Then thirdly is the most important, which is the land grab mentality. I'm very glad PM made the choice to say that we want to get in early on. This is exactly what investors said about the dot-com bubble, and look what happened to them. It took until 2013 for the stock market to return to the pre-2000s levels. We also think this is really bad because the amount of money needed to build AI is way larger than the return that AI ever brings you, which means you require significant levels of investment to continue to retrain models and to continue to develop different types of GPUs to distinguish yourself on the market, which means you need to spend a lot of money to actually get engagement and marketing. And even so far, it hasn't been useful. Even though people like to play games with ChatGPT, they don't actually use it for anything fundamental. And if they want to actually use AI, they'll just look for alternatives. I'll explain that later. But it's even more risky than the dot-com bubble because it's not actually building any physical infrastructure, which means it's less capital intensive and you can get a lot of alternatives in it. God might say, oh, there's smaller models that exist, but you need a larger model to distill them down, i.e., even if like NVIDIA can invest in smaller models, you still need a larger model to distill it down, which means it still requires a lot of capital intensive work. And even though smaller models require pretty expensive inference times. The second reason is AI is overinvested, just like the other bubble, the crypto bubble. Why is this? First, there's a speculative investment surge happening right now. So crypto funds are raising huge amounts of funds with lack of users. Similarly, AI startups are receiving tons of on top of hype cycles. Second is an infrastructure overbuild, i.e., because of crypto mining, there was a lot of GPU shortages and unsustainable boom for NVIDIA itself. AI trading is doing the exact same thing where there's a lot of chips being bought. There's not actual workloads for that. This means that spending is likely to slow on AI because companies don't actually have to use AI, or they'll realize they don't have to, or if they want to, they'll understand how to use it and implement the AI that they already have purchased into their current systems. Trust me, I worked for a law firm. They were already finding a way to move away from ChatGPT and develop their own AI. And they were already saying that we're going to use the current resources we've invested in AI and not anymore. Over the next 36 months, the build out is going to come complete. There's going to be no shifts in building data centers. Demand is going to normalize to a steady state. But let's say the PM is right and there's going to be tons of investment. Companies are just going to invest on their own. Two separate reasons. First, they want supply chain control. Second, it requires less resources that are more specified to their needs. This looks like the law firm investing in its own AI that can be specific to law cases. This is why Google is building GPUs, Amazon building Trainium, Microsoft building Maya. There's in-house to reduce reliance on NVIDIA. Any of them succeeding significantly damages NVIDIA's bottom line. This is why Oracle's stock collapsed after Amazon developed its own system for data services. When these niche markets are relying on huge amounts of demand, when that demand goes away, they lose huge amounts of their bottom line. We also think smaller models run way fewer GPUs, which means fewer resources are being used. Finally, overcapacity risks, i.e., there's huge amounts of investment happening right now, and after the digestion period, there's likely to be a significant turnaround. Let's take a POI right now. 3, 2,
The stock market doesn't reflect how companies actually perform. It reflects how people believe they perform.
AI relies on TSMC. We think that because of AI's reliance on TSMC to get access to semiconductor chips, you need to make consistent contacts with TSMC. But any other company is likely to outcompete you on price. Why is this? First, because every other company is like trying to beat NVIDIA because NVIDIA is the top dog in the AR market. But anytime Amazon's like, oh, I'll offer you 20 billion, NVIDIA's only offering you 20 billion, obviously TSMC is going to pick any other company. Why is this? First, because there's hyperinflated margins, i.e. NVIDIA is making huge amounts of margins right now, so competitors can just undercut it significantly. Second is because there's a customer incentive to break free, i.e. TSMC wants to diversify its portfolio, so it wants to buy from Microsoft, Amazon, and Google. And third, because of commoditization pressure, i.e. when CPUs become when GPUs become commoditized, there's likely to be a lot of shifts to price per compute unit where NVIDIA is most vulnerable. And we think it's really bad for NVIDIA to solely rely on TSMC because there's a single point of failure. They have no bargaining power with TSMC, and there's a capacity bottleneck, i.e. when NVIDIA loses access to TSMC, it struggles significantly because all of its resources are coming from TSMC. NVIDIA is unreliable. Don't invest. So proud to
I thank the leader of the opposition for that fine speech and to welcome the Deputy Prime Minister to conclude the case for open in government. Hear, hear.
Yeah, am I audible?
Yes.
Okay, perfect. I know the US Open is happening these days. Investing in NVIDIA is like investing in Yannick Sinner when he won his first major. You know he's going to be a great player. You know he's going to be one of the best players of this generation. You're just investing in when he starts off. That's the same logic we're going to explain why NVIDIA is so important. The first thing I'll explain is to why the risk-taking of the mutual fund is most likely going to be done in a managed way and is not going to be like unnecessary risks like opening opposition is talking about because they really give no incentives as to why this is the manifestation they want to talk about. We probably have fiat in this motion, so we aren't going to spend like all our money in our mutual fund there. The first reason is just very, very simple. All of their logic also applies for the people and the investors and the analysts in the mutual fund. They're more likely to go and invest in more stable funds, more stable like investments like tech, like I don't know, like every other fucking stable investment, like anything in the Fortune 500 or like S&P 500. All of those investments are going to be stable. So you're most likely going to have a diversification in the way the investments are done. It is genuinely unclear as to why it's all going to be risky. The second thing I want to note here with regards to the incentives is I think the reason why the people or the investors want to have some risky investment is that is when they get a return. So you need to have risky investments which are likely to have upturn in profit. The reason and the problem with just investing in very stable investments is their return is also going to be very slow, right? They're already big companies. They're already not like their profit margins are going to be stable, but they aren't going to grow really fast. With NVIDIA, the really important difference is they're going to fucking blow up even more when majority of the economies in the world become dependent on AI and use AI more and more, like go to 70% of like the whole economy is becoming more AI, right? That is the reason as to why it's important for the people who've put money in the mutual fund to go and invest in risk investments because they want to get a better like payoff at the end of the investment. They want to get more money. They just get it much better when you diversify investments and also invest in a really profitable thing like NVIDIA. Let's talk about the AI market because they just drop a lot of unrealistic bullshit in this debate. The first thing they say is that, but the AI market is losing demand. You have other alternative companies like Amazon and Meta and these smaller law firms like talked about who are investing in AI. This is all true. The nuance is they're investing in products. So you're investing in chatbots or different AI producer products, like for example, like the ways to like pull through like data, or you go and do other things like diagnosing diseases or educations like Anna talked about. The difference is all of these products need the hardware NVIDIA is providing. So even if you have a diversification in the companies and what products they produce, NVIDIA is upstream from that. All of these companies are dependent on NVIDIA because without NVIDIA, you don't have the hardware, you don't have the production, you don't have the processing unit. None of those things can be produced independently because of patenting laws, because of the fact that they already have control of the market and they're the biggest producer. They already have things like economies of scale so they can produce for cheaper. They have the best designers, they have the best innovators, they're the best researchers. So you can't take them out of there because they already have long-term contracts, etc. So you can't compete with NVIDIA on that ground. You're competing with other people like Meta, like Amazon, like Google on products like ChatGPT bots, like other AI tools, right? And the second thing I want to note here is that which they ignore is those companies becoming more powerful is the reason why NVIDIA becomes more powerful. And the logic here is very, very simple. When Trump got into power, OpenAI, Meta, and Amazon were at his inauguration. The reason is they got billions and billions of dollars in subsidies to go and invest in the AI bots and the AI products. This is really important because this is the creation of demand for NVIDIA to continue to be more powerful. That is why there's been a massive trajectory in their profit margins increasing and the market capitalization increasing, because the biggest companies in the world are producing more and more AI products, which means that NVIDIA's demand for their chips goes up, which means that their profit margins goes up, and that also means that there's going to get more money. That is why this is a risky investment, but an investment which is also going to be stable linearly upwards towards more profit. Then they say, but majority of these things are useless. They compare it to the dot-com bubble. I agree, some of them are. AI is not a monolith, and that is the nuance that they miss in our case. With regards to medical healthcare, AI can do things that humans can never do. They can diagnose cancers in the smallest cell possible years before humans can ever see it through an X-ray or MRI. They can diagnose diseases and do things like molecular diagnoses or molecular breakdowns that humans can't even conceptualize right now. These are life-changing, billion-dollar industries that pharmaceutical companies and researchers want to invest in, which means that NVIDIA just gets more fucking money. AI education is a massive thing because of how it provides developing countries with capacity to get good access to education. They just get online and talk to AI chatbot in the US and get really high quality education through math, English, Spanish, whatever the fuck it is. All of these are massive demand-based things that aren't bubbles, that are actively helping billions of people on the ground. And this demand is actually realistic and sustainable because these benefits are realistic and have tangible downstream impacts on the ground. All of this means very, very simple things. One, even if there is some amount of bubble nature that they're talking about, it is not a monolith to the majority of the AI sector, which is actually tangibly important. So at best, they prove some AI parts are bubble. They don't prove why majority of it is a bubble insofar as it is profitable. But secondly, we also explain, even if it is a bubble, it is not likely to blow up in the next 5 years because of the incentives of the Trump administration to ensure domestic companies get greater capacity, get greater profitability, because that's why Trump ran on a fucking America First platform in the first place, right? So it's an incentive to make sure these companies don't collapse because there is fucking political suicide. So it's incentives to subsidize and continue on to go and continue to produce it. Then let's talk about alternatives, because I'm sure CEO is also going to run something about China being really good, or talks about TSMC. The problem with TSMC is very simple. They're a massive risk, and the reason as to why companies and countries are moving away from it is because of the rise of China. It's just, I think it's logically very, very simple. You don't want a fucking bottleneck. The majority of your AI bots and chips are coming from a country that get fucking invaded and completely destroyed. Why would you want to take that risk in the first place? Perfect. Yeah, go ahead. Yeah.
TSMC manufactures 100% of NVIDIA's chips. There is nobody able to compete with them. Samsung and Intel just don't have the fabs that are able to produce these chips.
Untrue, right? The reason why independently NVIDIA became market capitalized so high is because they moved on from using the institutional knowledge they got from TSMC. This is just how fucking any production company works, right? Then why the fuck is the market capitalization of NVIDIA so high and not TSMC? It just doesn't make sense logically, right? So they independently produced and innovated, and they broke off, decoupled, and they created their own fucking AI farms, AI production farms and factories in the US. That is how they became more independent. I just think TSMC is incredibly unrealistic and a risky investment for most companies and countries. They're trying to move away from it. As a result, the NVIDIA just gets more capacity. China is just a bad alternative. China is an unstable country with bad laws, bad innovations, old chips which are inefficient, and very, very problematic investments, right? And the reason is the Chinese government has a problem of investing in bubbles. So they are very preemptively scared. They have the mortgage bubble. They have other bubbles in the EV sector. See, they don't want to invest too much money in DeepSeek and other AI sectors, so the production won't ever get as high as NVIDIA, because China has a preemptive incentive to make sure more bubbles don't come up, because they saw the damage the mortgage bubble did to China. So this means production will never be able to compete with NVIDIA. It is just much more of a stable asset. They're just going to get so much more money. I think every mutual fund should go and fucking invest in NVIDIA.
I'd like to thank the speaker for that fine speech and to welcome the DLO to conclude the opening opposition case and the top half of this debate. Hear, hear.
Ooh, can you see and hear me?
Yes.
3, 2, 1. Lots of content that I want to get through as the masters in AI, so just gonna get right into it. First question, why is NVIDIA overvalued? I want to specifically note out the stock statistics that exist for NVIDIA. The problem with opening government is that they don't actually tell you what the leverage of the PE ratio is in status quo. NVIDIA makes about $150 billion a year. And so the PE ratio right now, which is the price that you use to buy an individual share to the forward earnings that it has, is about 60 times. So the problem with government is very simple. They don't need to prove that NVIDIA is going to go into a boom, but they need to prove that the price increase is about 30 times at the very least. That means that NVIDIA multiplies so largely that it has at least a 30% increase in scope. Note that this is the likely way because currently the way the market is priced is that you want to buy and create roughly $60 of value for every dollar an investor is investing in status quo. So this means that there is massive amount of overvaluation that exists inside government. Secondly, note that this also minimizes the vast majority of opening government's impacts. That's because obviously if opening government is right, that there's likely to be lots of growth. The 60 times growth potential shows that the market is already priced this in. So the very big returns that opening government talks about are just unlikely to manifest because they're an expectation of the market in status quo. This means that it is very unlikely you're going to get significant upside in opening government, but on the downside, you have significant amount of risks. There are two ways that you weigh this argument against opening government. The first thing to say is that this is just a yearly reminiscent of the dot-com bubble. Think about Cisco, which was valued at about 120 times P/E ratios in the dot-com bubble. Cisco's revenue grew after the dot-com bubble, funnily enough, but its stock price fell by 80% because they grew, but just not fast enough. They grew about at a 10 times ratio when it was expected that it would be about 40 to 50 times. So this is the first comparative that I think takes out opening government. Secondly, and this is really important, panel, most investors have not priced in these facts. Most investors have priced in these types of things to the point where billions of dollars of capital funds and venture funds have already invested in this side of the house. I just think this means that AI is particularly overvalued versus the comparative we gave you. But lastly, their risk analysis is heavily mitigated by this framing because they're not making as much money as they want to talk to you about anyway. So I think that already wins the round right there. What then is the goal of a mutual fund? I think the goal of a mutual fund in the vast majority of instances is to serve regular everyday investors. For high-end investors, the big ballers like equity funds have billions of extra dollars. This is meant to be a retail-based thing in most cases. So that's the case like BlackRock and ETC don't control the direction of these companies because NVIDIA has $4.3 trillion. Like even if a mutual fund invests, they're unable to take control of the company because it is just so fucking large. You don't directly have incentives to actively be able to move the company because the amount of stock you can get, even if you get 1%, is like already $4 billion of stock. So to the extent that this is true, I think NVIDIA, there are two goals for mutual fund, right? One, obviously minimizing the amount of risk because you're appealing to retail investors. You're appealing to everyday people who just want to put their money in and forget about it. But also it's really important to note that you want to have minimal amounts of risk because obviously on their side of the house, you can't actually control this company because these companies are way too fucking large. That's why you don't hear Carl Icahn buying out Microsoft. You hear him buying out a $5 billion company, not a $500 billion company. So to the extent that that's true, we think the minimal amount of risk is particularly important. Which also, by the way, frames the opening government case. Even if there is some degree of volatility, the opening government talks about, I think any amount of risk is harmful for a mutual fund specifically because it is just the case that mutual funds rely on long-term predictable returns. Their best response is, but guys, you're going to have like diversification of investment. Two responses that I want to note. First, if you wanted risky investments, invest in the healthcare company that is actually doing the changes. I think investing in NVIDIA isn't a particularly good thing because NVIDIA is not monetizing its service after the AI has been created. So the healthcare company that they talk about might be a reasonable investment on either side of the house. I think that's the comparative that we think are okay with taking risk. Secondly, obviously, their impact scales with the amount of money you put into NVIDIA. So to the extent that you have to put in billions of dollars, that's how you get the really large returns. But they never explain why you're going to put in those billions of dollars on their side of the house, which means that either you put in a lot of money and then our impacts happen, or they don't get the vast majority of their claims as well. Second question then, why is there significant amount of competition and why is NVIDIA not reliable? Opening government is fucking lying to you. The reason why NVIDIA was the main manufacturer of chips is twofold. First, the AI thing started in about 2016-17 with the rise of the paper that said that transformers attention is all you need. This is barely 5 years ago, and building of semiconductor factories took incredibly large amounts of time. Before this, NVIDIA had direct contracts with TSMC. They were able to manufacture their chips. But secondly, and this is really important, panel, GPUs are design-based. They are not based in the production in the United States. The only factory in the US that can actually produce GPUs and status quo is the TSMC Arizona fab company, which does not have any comparative advantage because it has a minimal amount of production capacity. But even more importantly than that, we would posit that NVIDIA has actually lost market share in two ways. First, because NVIDIA is so expensive, other competitors are stepping in. Let's talk about Microsoft's Maya, which has literally been a hyperscaling inference tool. Google building TPUs in order to get over the reliance on NVIDIA, or the fact that AWS has built its own Trainium. All of these mean that your biggest clients, which are also your biggest rivals, are already shifting away in the AI race and don't want to buy NVIDIA things anymore. This also comes back against the framing argument of subsidies. Because guess who you want to subsidize? The company that is not able to produce hardware anymore, or the one that has multiple other billion sources of revenue. It's likely, given that Trump is already lobbied by AWS and Meta, given that opening government concedes this, you are going to have that investment more into these areas rather than that. Secondly, NVIDIA doesn't even have a competitive advantage to the same extent. Like, guys, their CUDA architecture is really fucking good, but PyTorch and TensorFlow have meant that you've had significant amount of open source distribution. That's why AMD infrastructure can now support things like GPUs and status quo, and also AWS and others have tried to make themselves platform independent. This means that it is likely the case that other competitors can enter and is no longer as highly priced in the industry as it was in the past. So to the extent that this is true, there is a large amount of competitive change for NVIDIA and status quo. I'll take closing if they have a.
Yeah, the stock market doesn't function off of how companies actually perform, but how often people perceive they perform. Everyone is afraid that like AI will take their jobs, like they'll invest.
Yeah, I'm going to talk about that in a second. That's actually probably the best case that opening argument also gets. Finally, why do people not think that AI will take their jobs, and why do investors actually not notice this? Firstly, there is a hype of monetization. I don't think that's actually the case that AI can take more jobs for two reasons. First, I would posit that healthcare and other sectors with opening government and closing government that we're going to talk about are very, very massively regulated. So it's very difficult to have a cancer treatment approved by AI. Like opening government services, give me one actual example. Secondly, I would posit that in the vast majority of cases, there are experts within these mutual funds. They investigate the market and look at many other things. So what this means is that people often have significant amount of knowledge, which means it's likely the case that mutual funds know that this earning is going down. But thirdly, the stock market does in fact operate on earnings. If your earning potential is not matching the reports, I would actually posit that your stock rate goes down massively. So what this often looks like is if my Wall Street quarterly call wasn't good enough, then my information plummets and I cannot make less. Finally, and this is really important, panel, there are many restrictions on NVIDIA in two ways. First, obviously, TSMC in China, you can't sell to China, which is one of the biggest AI markets. But secondly, I would posit that NVIDIA is only useful when you have immense amounts of capex at the start. NVIDIA is cut out of the system once you already have your GPUs, when you've already built up AI. So there's a massive risk of in 3 years, you don't need this anymore. There's no monetization. Close.
I'd like to thank the DLO for that fine speech and welcome the member of government to begin the closing government case and the closing half of this debate. Here.
Guys, POIs in the chat. Thank you. We think that NVIDIA is currently doing really amazing things. So they're investing like a $500 billion into USA to build AI supercomputers. They're cooperating with TSMC on like NVIDIA Constellation things, and they're currently being one of the most and like best rated stocks there on the market. What the case then coming from us is going to be is simple. Insofar you choose not to invest in NVIDIA, and there is a huge pressure on everyone to invest, and people want to invest, and people think this is going to be a huge money maker machine. You're like, your fund looks less attractive. People are more likely to withdraw money and go into other funds, and you lose money and you bleed money even before NVIDIA, NVIDIA bubble bursts, and why this is comparatively worse for you. So firstly, why is there a pressure to invest into NVIDIA, and why is it important for your fund to be there and to invest? The first reason is the boom of NVIDIA. We all read the info slide. Like, it has a huge share of the market. The stock is rising in price and everyone is investing in it. If you go to any investment page currently, they're all going to tell you to invest into NVIDIA because NVIDIA is doing amazingly. It shows growth and it has a lot of structural reasons that OG does provide as to why you should invest into it. Secondly, there is a perception of people around AI and tech. People believe that this is the industry of the future. They see it incorporated in their day-to-day life. People are slowly starting to not be able to envision a life without AI, and they believe that AI is inevitable, like eventually going to replace them, and that AI is going to be the future. But secondly, they do see that this is the biggest money maker. Like, it's everywhere. We talk about it all the time. People believe that AI is what internet was when it was introduced. Thirdly, people believe that NVIDIA is going to be really, really successful because the things that they read about NVIDIA in the newspaper are the $500 billion investment. Is NVIDIA CEO shaking hands with Trump? And is NVIDIA making money, which means that even if NVIDIA necessarily has a lot of structural reasons why it will not be profitable, as opening opposition claims, people have the perception that it will. And not only do people have the perception that it will be profitable, because a lot of stocks can be profitable, but people have the perception that this one particular stock, which the entirety of AI is hinged on, is going to be the most profitable stock for them and the best investment that they can make. But fourthly, we believe that the reason why people invest in these funds and the investment you're looking from these funds isn't necessarily the most stable investment. If you want that, like, buy government bonds, I don't know, buy the Amazon stock that opening opposition tells you about. People want more like return on their investment, which I think opening government is correct in, which means that people are thinking that this is going to be profitable. This isn't as risky as some other stocks are, and people are exerting huge pressure on you to invest in these stocks, which means that insofar you're a private, like you're a fund management, whatever, and you do not fund, and you do not invest in NVIDIA, a lot of people are going to be really pissed. Why? Because firstly, insofar you do invest, Because firstly, you're going to be seen as the pariah of investment. Everyone is investing. All of their investment friends are telling them that NVIDIA is making a lot of money. Look, I made this much money off of my stock. All the apps that they're scrolling through, like Reddit or whatever investment bros read every single day, and which makes them like schizo in their beliefs, is literally what tells them that you should invest into NVIDIA. And you are not investing. That should look like pariah in comparison to all other actors which are investing. But secondly, this means that people just move to other funds. Their friends are in another fund and they say, look, I'm here, they invest into NVIDIA, and NVIDIA is making them money, which is why you move to another fund. And you see that NVIDIA is having a continuous stream of money. And this is all the reasons why you move your money from this fund to other funds, because you believe that this fund is firstly not going to make you big bang in probably the most important industry there is. But secondly, you believe that this fund is making bad decisions and that other people are getting more rich than you are in the stock market and the fund is not managing properly. Now, why is this horrible, and why is this more horrible than anything coming from the top half? Firstly, because it's the least speculative thing. Like, yes, maybe you can upscale, maybe you cannot upscale. Maybe monopolization happens, maybe it doesn't, and maybe China outcompetes you, and maybe there is someone with like huge technology and Microsoft is going to make a breakout any day now. We believe that all of this is going to happen in a couple of years' time. What is true and what is safe is that currently NVIDIA is having a huge growth and everyone is investing into NVIDIA, and you are the one not making the investment, that people are likely to withdraw the money now. But secondly, we believe that even if the argument about asset bubble bursting is true, which I'm going to talk about why it isn't true, we believe that it is better that you go with the bubble than you going preemptively. Because now comparatively, compared to other funds, you look worse off that you shut down because you are seen as incompetent. You are seen as not knowing how to invest, and you make less money and less people trust you. Like there is a bad name related to you on the investment platforms because you're the one not banking on this huge stock that is happening and that is growing. What happens if you go down with an asset bubble is you're literally the same as every other fund, meaning that insofar people are choosing where to invest, comparatively you look fucking the same. But secondly, governments also do things like bailouts. They make sure that people don't lose the entirety of their savings, etc. So there is some saving grace, which means that even if an asset bubble happens, which we don't believe will happen, it's better to go down that way and for it to be like a collective mistake. Oopsie, we all did 2008 again, than for you to go before the bubble happens, because then this is much less reversible. Insofar you are the one which was bad and you are the one which made the mistake. Before asset bubble burst and you show to be correct, your career is already done. Your fund is already bleeding, already bled a lot of money. So before going on to as to why NVIDIA probably will not be a bubble, I'm going to take opening.
This is not how mutual funds work, because mutual funds are an index weighted on a number of stocks. You don't see NVIDIA's individual performance. If I wanted to invest in NVIDIA, I would just buy that stock. This is a long-term investment for individual people.
Interesting. I don't believe that to be true. I believe that people who are your basic retail investor connect NVIDIA with money. They think if we invest in NVIDIA, we're going to get huge returns. And then you know that your the fund is not investing into NVIDIA and it took a flat position on NVIDIA. I think this is how your normal person that reads Reddit and invest things. Because if I don't know it, I don't think they really know it. So why won't NVIDIA be a bubble? So firstly, we don't believe this is going to happen in the next few years. First, they're monopolizing the market. Opening opposition has some speculative claims as to why there are other competitors which exist and they can be a huge deal for them. Firstly, NVIDIA has majority of contracts existing. Currently, it has the most amount of government financing and the most developed technology. Secondly, NVIDIA is already miles ahead of them. Apple currently struggling trying to develop AI and trying to develop this technology, and they're currently failing in doing all of this. I'm unsure as to why in the next few years then they're going to become significantly better than NVIDIA. Secondly, programs they're doing right now are allowing them to upscale and to produce significantly more. So we believe that this is also why it's hard to outcompete them. But thirdly, you currently have the reason why they're going to be relevant is you have a chip shortage. More people work from home, you need PCs, you have militarization. All of these things require AI for you, and you need more and more of it. But the next thing I want to talk about is why AI, companies are going to continue using AI, because opening government tells you you have research. Yes, niche, kind of niche AI usage. So there are reasons why normal everyday business are going to opt into this. Firstly, this is cheaper. Secondly, it helps you remove biases, and this is why a lot of corporations are starting to use it. Thirdly, it makes workers more productive, meaning that you do not have to do menial labor. But fourthly, even if quality of your product drops, everyone uses AI. Comparatively, your product is the same. So this is why even if it's kind of shit, everyone continues using it, and NVIDIA is likely to be profitable.
That's time. I'd like to thank the speaker for that fine speech and to welcome the member of opposition to begin the case for closing opposition. Hear. Member of up?
Yeah. Just timer stuff. All right. Two things in this speech. First, filling the gap in OO on why risk is actually unacceptable to mutual funds and their investors. And second, filling the other gap on OO, explaining why this bubble is actually going to pop within the 3-year time span because investor perception will change. Okay, first on why risk is actually unacceptable to mutual funds and their investors. Regardless of speculative guesses about whether NVIDIA is going to go up or go down, you are overexposed to AI. The problem is that almost every highly valuable company in the stock market, the Magnificent Seven as they're called, which make up 38% of the S&P 500 that you're being compared against, is massively invested in AI. What this OO tells you that this is too risky, but they don't explain why risk is unacceptable to the primarily retirees and retail investors you serve. After all, if you take on a ton of risk, as Gov rightly points out, you get compensated for that risk in the form of return. The problem is that investors have diminishing marginal utility with respect to returns. That is, if you're saving for retirement, would you want to invest your whole portfolio in an asset with a 25% chance to sextuple and a 75% chance to go to zero? No, a 75% chance of having literally nothing in retirement and being broke is unacceptable. I just gave you an asset with a 50% return and yet you wouldn't take it. Living nicer in retirement is not worth the chance of being broke. Now, I know this mutual fund isn't literally going all in on AI, but the important insight from my example is that what you care about is not your absolute return, it is your risk-adjusted return. That is, how much of a roller coaster, how much risk do these retirees need to take on and your other customers need to take on in order to get the risk that you promised. This is why you don't merely evaluate investments on their return, you evaluate them on this risk to return ratio. So OG says, well, we'll just invest in other stable companies. I already explained why most of the economy and most of the valuation of all these other companies are based on AI hype, at least to some extent as well. And AI hype is the only sector of the economy, of the stock market, that's actually doing legitimately well right now. This means that if to try to be stable, you invest in other profitable large companies, bam, you're exposed to AI all over again. It's good to at least cut out NVIDIA, where you are most exposed to AI because they have almost no other business model. Whereas in theory, whereas at least in theory, these other companies have other businesses, right? Google provides a service that isn't just totally dependent on AI. Okay, great. OO fails to terminalize their impacts. They tell you that the AI bubble is going to pop. They give you all these reasons that AI is going to go down, but they don't really seem to understand how a bubble pops. Remember, the timeline for this investment is 3 years, literally 36 months. If OG is right that the hype will continue for the next 3 years, then this is a good investment, even if the fundamentals of AI make no sense and all of the things that OO says come true and these companies are super unprofitable. So yes, OO tells you why AI is going to eventually fail, but they don't tell you when investors and businesses who buy GPUs and make NVIDIA money are going to realize that AI is all smoke and mirrors. The issue with AI's high valuation, then, is that it means that investor expectations are really high for returns in the near future. This is why the bubble is going to pop within the next 3 years. I'm going to give you a bunch of reasons why. Essentially, if investors don't see these high expectations met, they're going to flee the ship. Consider what, in this moment, right now, investors have been promised. They have been told that AGI is a couple years away, and it's going to replace humans in almost everything very soon. These investors are reading things like the 2027 scenario. They are getting excited about AI agents doing work in these companies. Meanwhile, the actual studies that have been done show that 95% of these AI agents are losing the company's money. They've been told that even if AGI isn't coming, NVIDIA is, quote, selling shovels in a gold rush and will keep buying GPUs. Furthermore, they've been told the reason that this isn't necessarily true is because we found that these GPUs have last 1 to 2 years in AI. Why is this? It's because the processing power demand for new AI models is currently scaling exponentially, and the existing models are not sufficient to provide the products that the startups want to do. I literally spent a little while working as this contractor for this AI startup that is trying to build prompt to game. Too dumb. They can't code a video game. They don't know how to do it. They need better models. The problem is the AI bubble started in 2023. That means that we're hitting this timeline. Startups and AI companies are about to need to buy a giant new round of GPUs. This costs a fuck ton of money. But the problem is they're all unprofitable. Their products are all terrible, and none of them are actually making money. This means that there is a tipping point coming up, a tipping point where investors are going to have to say, oh my God, I spent a ton of money in 2023 to try to get these products to market, to try to get these, to pay for these GPUs. I'm now going to have to pay for even more expensive round of GPUs all over again. Is that investment worth it? And the thing is, they're going to assess that it's not actually worth it. Why is that? Because people have been told that AI is fundamentally here. They actually use AI in their day-to-day lives. Like, yes, I understand that investors are happy to stay invested in risky companies when they believe that those companies are in the early stages, that they haven't switched to commercialization yet, that they're growing market share. The problem is we are no longer in this stage. When you use AI in your day-to-day life, when companies are rolling out major products that they are actually charging money for, that is the point at which investors are going to expect them to start to make money. This is the moment in the dot-com bubble where instead of you being like, oh my God, like the internet's going to be amazing, the internet companies actually exist, the websites exist, and the investors are like, oh wait, where are all the profits that we were promised? The problem with these early rounds of commercialization, of course, is that yes, this technology probably eventually has potential, but investors expect the first companies that attempt to do it, like the first companies that try to make it happen, to be actually successful in that. The problem is they rarely are. It takes a long time to find this, applications that actually make sense to have these companies develop. They are not going to have this. They are not going to meet this deadline, and that is why you are going to get a crash in the very near future, because investors have been promised unrealistic expectations right now. I'll take opening.
So AI, like any other technology, is a step-by-step process. Even if you don't get the final product, when newer good products get into the market, the investors risk is mitigated. And if there are no other good investments, like you said 3 minutes ago, where the fuck do they go and put the money into?
Oh, yeah, sorry, let me be clear. There's a bunch of other good investments. Like what I'm saying is that if you try to like invest in a bunch of other stable companies, you're going to be overexposed to AI. What we're proposing is for you to actively avoid AI by not buying NVIDIA and doing other things. So right now I'd probably invest in like foreign markets that aren't as tied to AI as the US. I would probably invest in like small and medium cap stocks. Historically, those have had like a major factor tilt that have like advantaged them in the long run. I think there's a lot of other options than investing in like big US companies. We think that the best option is to like actively avoid AI rather than just merely going along with it. The last thing I'd like to say in the speech is that like NVIDIA is massively at risk right now. Why is this? NVIDIA's primary advantage is their CUDA ecosystem. This is basically a bunch of software that makes it really easy to run AIs on max performance on their chips. The problem with software is that if you don't care about copyright infringement, you can just copy it. Trump has recently approved something that will, or it looks like he's going to, that will allow NVIDIA to sell a bunch of GPUs to China and pay the US a tariff. The problem is when China actually gets these GPUs in their hand, they can just copy the software and they can like take pictures of the chips under the microscope and like catch up and do that. Once China becomes a major competitor for NVIDIA, that's another thing that's going to absolutely crater GPU demand, that's going to crash the stock, and it'll happen in the very near future because this deal's about to go through. And as soon as investors see that China has like NVIDIA quality or close to NVIDIA quality GPUs that they're able to purchase because they stole NVIDIA's intellectual property, which they've done a bunch of times before, they're going to completely panic because the valuation is again based on NVIDIA being the only focus. Okay.
I'd like to thank a member of opposition for that fine speech, to welcome the Gov Whip to conclude the CG case and the Gov bench. Hear, hear.
Yeah, just 10 seconds to set up my notes and I'll be right there. Okay. Am I audible and visible?
Yes to both.
Okay, great. I will start my speech at my first word. People became billionaires after the 2008 financial crisis. The stock market functions off of vibes, and Zagreb will win off of vibes as well. I'm going to do a few things. First of all, I want to clarify our content. In this debate, you are a mutual fund, meaning everyday people invest in you, not huge firms or huge investors. This means it's very easy to be outcompeted by big names like the S&P 500 or the NASDAQ that have the most rep and people buy into them the most. But the thing that you can do uniquely is signal that you're a growth machine, you're a money printer, right? You put money into some of the riskier stocks, into some of the stocks that might perform significantly well, that, I don't know, investment gold or Apple or like some of the secure stocks. And that's how you're able to get the small investors. who we attract is the people that want to just put 5% of their income somewhere so they can make extra money for an extra week of vacation, right? This is inherently good for you as a fund on weighing, because even if whatever's going on with NVIDIA right now doesn't work off, you need these future investors in order to make your future endeavors possible, right? What we're securing you on weighing is long-term longevity as like a fund. So I think that pretty much just every team in this debate is missing the case besides us, because there's like an entire lack of responses and like a lack of reframing. Like, for example, CEO tells you, oh, but companies will realize AI is useless and they can't actually like replace their workers or whatever. But Yahuda tells you that people just listen to and watch Joe Rogan that has people on telling you that, oh, AI will replace you in 5 years, in 10 years. People see AI as a big threat. People see the CEO of NASDAQ shaking hands with Trump. People see this thing as important, so they invest into it because they think something real will come about from it. I want to move on then on why we take opening government. First of all, I think we just filled some of their analytical gaps, right? Opening government doesn't give us any real analysis as to why governments continue to use AI. I think Yaguda does when she gives you the structural reasons on why it's cheaper, et cetera, et cetera. Secondly, I want to weigh our content on becoming popular to smaller investors and growth signaling. Notice a big mitigation we give to OG. Different funds have different types of fiduciary responsibilities. Mutual funds must ensure risk-adjusted returns. This means you'll have to hoard a bunch of other stocks as well as this fund. So you can't just put it all on red, 50% of on NVIDIA and fuck it or whatever. You're gonna have to put a lot of money elsewhere. So you're not gonna like grow and boom and become a billionaire just based off this one stock alone. We think this kind of mitigates all every like impact they're trying to prove with how much you're gonna put into it. What you can do though is convince the average person you're a growth stock. You invest into money makers, so people like want to actually put money into you as a fund. Thirdly, notice, I just want to clarify that we are not dependent on their content. Even if NVIDIA doesn't boom in the following years, right? You can still market yourself as someone that's willing to invest into huge performers. Just notice, NVIDIA is the best performing company on the stock market in the past 12 months. Signaling that you're willing to put a lot of money into that just makes people say, okay, this is just 3% of my income anyways, but I can make a bunch of money if I put something into this. I have a savings account in a bank anyways. I'm not going to put all my savings here. I might as well put money into this fund that's focused on growing companies. I think that's what makes us popular. I think opposition bench then misses an opportunity to get these people. Nextly, I want to talk some responses to CEO. First of all, they're just largely very derivative, like, oh, let me explain why people don't like risk. I mean, yeah, it's bad when bad things happen and good when good things happen. I don't think this is like real new analysis. Secondly, I think they should just parrot O's points that NVIDIA only does AI and that's why it will fail very soon. This is just fundamentally untrue, right? Intuition pump NVIDIA has existed for decades, long before AI has been very important. Microchips and processors are just super important for computers and technology broadly, no matter where AI goes. And thirdly, they say like, oh, but companies will realize like this whole extension occurred, like companies will realize AI can't satisfy their needs, so they'll give up, blah, blah, blah. Three responses. First of all, AI doesn't have to fully replace a worker. They just have to lower the demand for a worker from 10 to 8. So for example, like a law firm doesn't have to have a robot arguing in court for it, replacing all of their lawyers, but they can just like use ChatGPT to read legal manuscripts, and like that'll lower your need from like 10 legal experts to 8 legal experts in your company. So you're still going to use it. Secondly, I think there's just been a signal, like a significant growth in use of these AI regardless. I think they're lying to you, right? If this isn't true, why would so many people be investing into it? And lastly, I think they just want to arrive early. Like, sure, people are telling you that like, oh, this big growth is going to happen, this big boom is going to happen, but clearly people are buying into those narratives because NVIDIA is growing. So maybe even if you don't see any benefit now, you just want to buy into the growth that will supposedly happen later. Before I move on how we're going to take OO, I'll take a POI if there are any preferably from opening.
Right. Even if it is the case that stock markets operate in vibes, they operate more on the earnings reports that Wall Street makes. If NVIDIA isn't making money and the stock price goes down, that's when there are harms
Okay,
in the market.
there's a link here you missed though. NVIDIA doesn't make money, stock goes down. You yourself claimed how horrible their PE ratio is. Tesla produces by far the least amount of electric cars and sells by far the least amount of electric cars from all electric cars companies. If people believe a stock will do better in the future, they invest into it. You don't need to believe the company will perform well. You just need to believe that other people will believe that the company will perform well. Finally, then, on why we take opening opposition. First of all, I think our extension just broadly responds to their case, right? It's not important that the PE ratio, like the PE ratio of NVIDIA and their earnings report or whatever, doesn't matter. The vibes matter. Even if you're like a finance genius and you realize that NVIDIA sucks, other people don't think that because other people see the CEO shaking hands with Trump. Secondly, I think they just missed their burden. Notice I'm going to give a key piece of feedback that I think positions us above OG as well. They just can't just prove why NVIDIA is in hot water. They need to prove why these problems will manifest in the next 3 years in a significantly detrimental manner, right? These are like different points. Because notice, I think like a lot of these problems can just be put off. You have rising competitors, just buy them off. You have a bad PE ratio, just take on more debt. You have too much debt, just beg, like suck Trump's cock on Twitter or whatever and beg him for more subsidies, and you'll get money that way. Like all of these problems compound into a problem that you'll have to deal with later, but you'll have to deal with it later. This debate is about the next 3 years. Lastly, like because I just have a bit of time in my speech, I want to talk about like just a few quick points of weighing on why I think our content is the most important piece of content in this debate. Notice because you're a mutual investment fund, the earnings you're going to be able to make from this like specific stock are not going to be that big in a sense. You're not going to be making that much money personally. The thing you actually need is to attract the biggest amount of small investors, because this is what will give you the capital to make significant investments in the future and to perpetuate yourself as a fund. I think actually gathering these people in your in like your circle of investors is what makes you win. I think Zagreb has won both on vibes and on analysis. Thank you.
I thank the speaker for that fine speech. I'll whip to conclude the CEO case, the op bench, the closing half, and the debate as a whole. Here.
Party, give me 1 second to organize my papers. This is a CO whip. I have too many papers. It's just how it goes. I'm gonna assume that everybody's ready. And I'm going to begin the speech starting now. Panel, the problem is that investing in NVIDIA is low upside and high downside. NVIDIA's current valuation is already dependent on massive fucking growth. That means that even if it grows and does well, it won't necessarily go up because that growth is already priced in. That's why it costs like almost $200 goddamn dollars for a share in the stock. If everything goes exactly as expected for NVIDIA, the stock will stay at the exact same level. On the other hand, investors are worried about a bubble already, especially since Meta recently paused AI hiring and Sam Altman said some of the market was in a bubble. That means that if market sentiment shifts and people decide that AGI is probably not coming in the near future, you have a long way to fall. What are we going to do in this speech? Something that no other team does, which is actually about the time frame that this is happening in, and tell you why specifically in the next 3 years, investors are going to lose confidence in NVIDIA's ability to grow massively and meet these targets. This is really important. I think it's funny, really funny, honestly, that CG relies on a lot of their speech with, yeah, duh, investment's going to keep growing because people are investing now. Why wouldn't they be if it wasn't going to grow? That is the worst thing you could possibly do in a bubble. That's like how bubbles work, is everybody going, oh, everybody thinks this is going to work out. I should put money in there. I should put money in there. No, that's not a safe thing to do. If you want to be smart, if you want to come out on top, you have to actually evaluate the technology and think about what investors are going to do in the future, in the short time frame. Okay. First thing, I'm going to extend Seamus's argument and tell you specifically why you're likely to expect returns in the near future. And when you don't get them, you end up very, very angry, like Seamus tells you, and pull your money out of the market. This is happening in the next 3 years. Backing up his argument by telling you the fact that they've already been told that they're going to do this, as Seamus says, during MO. They've been told in massive degrees that AGI is coming in the short term. It's going to be here. It's going to be here. It's like when people said that like women were going to be having more sex with robots by 2025. No. And because they have these short-term deadlines like 2026, 2027, and we are not seeing any chance of them actually meeting them, people are going to become at least significantly more skeptical in NVIDIA and AI than they are right now. For example, all those fuck-ass GPT-4 versus GPT-3 charts that you see everywhere where they're like, guys, look at how much better it's gotten. Meaning people are expecting a ridiculous exponential growth never seen before. NVIDIA is taking up more market stock than I think like any company has ever taken up in the S&P 500, at least like those top 7 are. Meaning that because AI is so drastically overvalued, it is impossible to win out on this deal. Plus, I'm telling you that recently, as in we are recently getting data that these studies show these are not effective ways to make profit. People have been investing, as OO says, but doesn't finish the argument. They go, yeah, the dot-com bubbles, people believed it was going to work out, but couldn't monetize it. We actually know that it's going to crash in the next 3 years because we are starting to get evidence that the monetization is failing. In terms of companies with AI assistants, as James told you, are losing money on those AI assistants and using them. As this information becomes more and more public knowledge, people are backing out. Right now, we're at the peak of a mountain. That's why it's worth so much. The only way to go is down. Even if you don't believe the whole AI bubble is going to pop, I think it's very easy to believe that this stock is going to go down in some way, shape, and or form. First, I'm going to do some rebuttal on the perceptions case from CG and then go back to OG. Let's talk about CG's perception case. Couple of problems here. First thing, the market hates drastically overvalued stuff, and not everybody's gonna be like, oh wait, you should invest in the thing that costs you more money than anything else. That's not how good investors work. I'm really sorry. But second thing, you actually have a massive long-term win. Like, people make movies about you if you're the one to avoid the massive risk in the stock market. If you're like The Big Short, dude, have any of y'all watched The Big Short? You're the winner here if you say NVIDIA is not going to come out on top. Meanwhile, I think that you actually flip this argument, attract a massive amount of people to you right now because everybody's overinvested in NVIDIA. For example, as Seamus told you, they make up a massive part of the market share. So even if you're investing in very safe investment like the S&P 500, it's taking up such a massive share that you're still overinvested in AI, even in the most safe investment you can do, meaning you are actively looking for places that are going to take you out of the AI market. Meaning that I think you're going to get a wide amount of people trying to come to you now, giving you more resources and money and believing in your hedge fund because of this take. Plus, you have a chance of actually avoiding this massive risk in the long term. Remember all the stuff I told you about specifically how NVIDIA makes up so much of the market right now that even if you're trying to get like a generally diversified portfolio, you are still going to be overinvested. You are attracted to these companies. This destroys CG's case. Let's go to OG. OG has, like, I think their most interesting point is about, like, lobbying and subsidies and the fact that the U.S. government's going to do stuff. Massive problem with this. Trump is so unreliable and makes enemies quickly. For example, the Elon Musk thing. People thought Tesla was going to go up, and then we're immediately shown that Trump does not have people he likes for any long period of time. Meaning that because this has been so recent and so aggressive, people are not going to think, yeah, Trump likes this. This is going to work for a 3-year-long investment. I should bet that Trump's going to like the same person for 3 years. I don't think Trump has had a thought that he's kept in his head for 3 years. Nor should investors think that he's going to be conditioned. Nor do I think that they will. Sure, I'll take the POI.
So AI aren't a monolith, and investors don't get spooked easily because they have inside information to what's happening in companies and in the markets. So they know the ROI might take a delay and might take time, but they don't want to lose the profit margins they might potentially get, so they don't pull out. Your case just does not.
Okay, so couple things here. I think that you're mistaking investing in specific AI companies that you think are going to do well and be successful and investing in NVIDIA. Something that I actually think is a really important point that I'm glad you're giving me an opportunity to say is that right now people are invested in NVIDIA because they don't know which AI companies are going to be successful. And investing in NVIDIA is a safe thing of being able to be part of the AI transition. As right now, we are starting to get data on which AI startups are actually good and successful. It means that you can make a safer bet on companies that are likely to actually do well and be good versus NVIDIA, which relies on all AI companies. Meaning that if you believe that a lot of them are bullshit, then their stock's going to go down. Or if people believe that a lot of them might be bullshit, which as we're getting massive evidence that AI is not shooting up the way people think it is, NVIDIA's stock's going to go down. And especially because people are going to be able to make more specific, safer investments in things like GPT or in things like DeepSeek, the stuff that they actually know works. They invested because of NVIDIA because of a lack of information. But let's continue running this rebutting this lobby subsidy point. Second thing, Trump is making the government broke and the stock market is actually crashing right now. In terms of, if you just think that the stock market's going to go down for the next 3 years, NVIDIA is probably going to go down and you're going to lose money by having really large amounts in it. I think that like in terms of Trump is absolutely making a mess of the American stock market. Investing in American companies is probably a really shitty idea over the next 3 years. We've only seen it absolutely tanking, meaning that he's definitely not going to fix it. And anything he does to the stock market generally is going to be worse. That plus they make this kind of ridiculous argument about political suicide. Dude, he's on his second term. If he's in office again, it's because he's gone authoritarian, not because he's convinced the population. But they also try to, but also something that responds to this that Seamus tells you is the fact that China is likely to steal the technology. In terms of, NVIDIA had a first mover advantage, as OG would like to say, but as China gets more and more access, people are going to have other options to invest in over the next 3 years that they believe might take over, especially as US exceptionalism is failing in the public eye. I urge you to vote CO.
I'd like to thank the speaker for that fine speech and all speakers for a good debate. Can my panel head into the OG